Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
I'm doing great. How are you?
I'm doing well, man. Thank you again for doing this. You are helping me learn something that I have never looked at, thought about. So I am a complete novice rookie. I'm not even sure I'm in preschool yet. And that is the art of technical trading. So thank you for being a part of the channel.
You bet. It's fun.
Yeah, I hope, and if it ever stops being fun, let me know. We won't do this, but hopefully it stays fun and interesting. I know I'm having a good time. So in episode 1, Dan, I want to do a look back, and we're actually going to pull up the system. We're going to show everything. I'm full disclosure all the time. But I want to remind folks about what we thought last Sunday. You ready to go?
Sure.
So for me, last Sunday we had two kind of opinions. One, we thought the NASDAQ was going to be in trouble, right? We thought, the notion of rates going up would cause companies who were priced on sales versus earnings to continue to have PE or compression. We thought there'd be more pain there, so we put on a trade there. And then second, we thought the yield curve expansion would make financials look better and better. So those were our two macro, opinions or thoughts. And then what we did from there is we found two trades that we wanted to execute. We found what is it? A double negative on what is
an ETF? Yeah, as a double inverse
correlation
on the NASDAQ.
Yeah. So basically, if SPY went down, this would go up. So you helped me found that what we were going to do, because again, we were using your risk calculator. We'll bring that up later. But basically, we've done things this week that I've never done. We understood position sizing. We understood getting into an investment in pieces, like 50% here and 50% there. And then most importantly, because of your risk calculator, you helped me put in a floor that would allow, or a stop loss that would allow us to get out to protect our downside. So again, you're helping me do things I've never done before. Is that fair?
Yes.
Awesome. And then our second assumption, we found a financial that appeared to be breaking out, putting in a new high, and it looked like it was priced. And thus we picked that as also a bet. Again, same deal, size the position based on my portfolio. We put in two different buys. And in that one, I think, which we'll see in a moment, only one of our purchases executed. So why don't we pull it up so we can show people what happened?
Yeah, I'm going to share.
Yep.
And the first thing we'll do is kind of review what we looked at last week.
Perfect.
So can you see my screen here?
I can. Thank you very much.
So this is the NASDAQ.
Mm-hmm.
Right about here where my crosshair is. Can you see that?
I can.
So that's Monday. So if you look at everything to the left of that, that's what we were looking at.
Yep.
So you can see the NASDAQ looked like it was going down. That's why we did the double inverse ETF.
Yep.
And on these are the 10 and the 2-year treasuries.
Yes, correct. Yep.
You can see the 10-year was going up.
Yep.
And then it actually retraced last week and then started back up again.
Yeah. So, I mean, if we look at this, if we're looking at this chart, we were right, but there was a Tuesday, Wednesday, Thursday, where the market kind of, So.
Yeah. And that's really good that you observed that, because that's what we're going to look at when we look at the trades themselves.
Yeah.
So let's start with this one with the NASDAQ. So to the left of this cursor was last week.
Yep.
On Monday, it went way down.
Yep.
So our thesis was correct.
Yep.
But halfway through the day, it just came roaring back.
And again, this is all technical trading. This is nothing I've done before. So as we'll see, we're actually going to pull up the trade, so we're not hiding anything. We were right Monday morning.
We were right initially, and I'll tell you, I'll explain what we did when we ended up being wrong.
Yeah.
But just to help people understand candles a little bit, candles are a great way to understand the psychology of the time period within that you're trading.
Okay.
So in this case, it's a daily chart, so it's daily candles.
So each of those lines is a candle.
Each of these is a candle. The way it works is there's an open, there's a trading range, and then there's a close.
Okay.
So if it ends up as a white candle, then that means it closed higher than it opened.
Great.
All right. If it's a red candle, that means it closed lower than it opened.
Ah, see, there you go.
Okay. If you look at this one here, it opened right here and traded down. You can see this little tail underneath. So that's the range that it traded in for that day.
Yep.
So it opened here and went all the way down here and then came roaring back and closed at the high.
So each candle says three things. One is the open, the range, and then the close. And that delta is the color of the candle. Clear or
that is correct. Now candles say other things as well, but that's something that you learn over time.
Okay.
Depending on their position, where they are. In this particular case, because it was at the low point of a downtrend, it ended as practically what we call a hammer. A hammer is typically a trend reversal. And you can think of it, think of candles like, think of, traders, think of psychology, right? The market opened, the market sold off, everybody panicked, and they were selling too. And then at some point it hit the low where it ran into a whole bunch of buyers. People that were just waiting for something, in this case, below the 200-day moving average. You can see this dotted gray line is the 200-day moving average, right? So people were waiting for it to get below that so they could start buying. And that's what happened. They started buying, and by the end of the day, it ended way up here.
So there was a bunch of algorithms or people that said, follow the 200, break the 200. That's the washout. That's all the fear in the market. They come, the algos take over, the algos run it past the open and closed higher. That's exactly what happened Monday.
Exactly what happened on Monday.
Okay.
Right. And now I was pretty certain, because I was watching this on Monday and I could see that it was forming a hammer by the end of the day, or by actually the middle of the day. And I knew that if it maintained that into the close, the next day would be a positive day.
Oh, interesting. Okay.
Which it was. You can see it's a white candle.
Yep. So that's again open and it closed higher. It's a white candle.
Open, went down a little bit, came back and closed higher.
Okay.
Now the next day it opened higher and closed lower. However, it did not close below the previous day's close. You can see it did. That's why it's black, by the way.
Oh, there is a third. I thought that was my eyes. So the black is basically telling
black
you.
Black means it went down. It closed lower than the open.
Okay.
But higher than the previous day's close.
Interesting. Wow, there's so much. See, this is all the stuff I didn't know. Okay, that's cool. All right.
That's a black candle. I actually, in some cases, I love black candles. I actually have a scan that looks for them, especially around earnings time. Because sometimes if a company has great earnings, it'll gap up way up here, and then it will sell off all day, but it won't go down to the close of the previous day. So it'll be a long black candle.
So again, let me summarize what that might mean and tell me if I'm wrong. So what that might be, a company has great earnings. You get all the rookie and retail investors that pile in because, oh, it's hot. But the professional's like too big. But then again, it closes above yesterday's close, which is like, yeah, that's a good day.
Yes, and to add to that, it's also a bunch of people that bought way back over here that said, I just want to get out now.
Oh, that's okay.
Right. So again, think of psychology. So these candles help you understand psychology.
Oh, well, I never even.
So the cool thing about that a lot of people don't recognize is that when it sells off all day, a lot of people panic. And they say, oh my God, yeah, it went way up, but now it's selling off. Everybody's getting out. I'm going to get out too.
Okay.
Especially the retail traders.
Interesting.
If it stays a black candle, that means it's above and sometimes well above the previous day's close. Then you want to watch it. The next day it might sell off a little bit, but then by the third day, the professionals step back in. And they say that the earnings were great. We've washed out all the people from over here, and now we're going to start buying.
A new base is being built or whatever.
Right. So a black candle can be a very reliable buy signal, but you have to wait. You have to be patient and wait for it.
Okay. All right.
All right. That's kind of off to the side. So anyway, this one here was a very small body. it had an equal tail on the top as it did on the bottom.
Hmm.
See that?
Okay. Yeah, I do.
It almost looks like a spinning top, doesn't it?
It does. Yes.
It's actually what it's called.
No,
Spinning top.
of course it is.
Spinning tops many times are trend reversals.
Interesting.
So when
Okay.
you see that, the next day you have to wait for a confirmation, but the next day, sure enough, it did reverse and went all the way back down.
Okay. All right.
All right, so that's what happened with the NASDAQ, and we looked at the
Mhm.
10-year treasuries. Looks
Mhm.
like they're taking off again. They're at a
Okay.
52-week high.
All right.
So now let's look at our trades.
Yep.
Okay, let's start with QID. QID is the
Yeah. So let me summarize what I think should have happened based on
Yep.
what you just did with the chart. So again, we were right. So that means we probably make a quick buy, and then we were right. So our second buy probably executed sometime in the morning. Then there was a reversal based on the candle, and we probably sold out either Monday or Tuesday, I'm guessing.
Okay, so here's what happened. You're actually pretty close.
Oh, okay.
So let's see, Friday, Thursday, Wednesday, Tuesday, Monday. So this red one here is Monday.
Oh, yeah. Okay.
Okay, so you see that one?
I do.
If you'll notice, that is the inverse of this one.
Interesting. Oh, yeah, yeah, because it's a cute. Yeah, I got it. Yeah, of course it is.
Right. So that's Monday's candle. So this goes
It's
up
a
when
double
the market
reversal.
goes down,
Right.
right? So it in the morning it went up. In fact,
Got
it gapped up.
it.
It
Yes.
gapped up on Monday. So our thesis was correct
Yep.
from the weekend.
Okay.
It gapped up. It was a green candle. And that's why it took out both of those buy points. Remember,
And
we
again,
put a
they were
buy-
Yeah, they were different trades. Yes.
Right. So we put a buy point in at 1752,
Yep.
and we put another one higher up in case we were right and it took off,
Yes.
which it did.
Yeah.
And I'm going to talk about that. So 1785, our second one executed.
Got it.
So the full position executed.
Yep.
All right, because initially we were right.
We were right
But
on
then,
Yep.
but then it started selling off because the
Right.
market started going up.
Okay.
So we initially had a 7% stop loss on this one.
Right.
When I saw this happening, when I saw the market reversing, I
Okay.
moved that stop loss up to 2%.
Got it. Okay.
So we only lost 2%.
And again, these are all things I would never have done before. Again, I don't know any of this stuff. You're helping me. We laddered into the position. We were right. We got validation. Then the market went against us and we stopped out. So we protected the downside. I can't tell you how good it feels to know the downside was protected. That's not something I would have done before. So again, we were right. The market went against us. We got out. We suffered a little loss, but we fight another day.
Right. And the important point here is that when you're trading, you don't ever want just to be right.
Yeah.
Being right is not the point.
No, being right. I'm happy to be wrong if I make money. Yeah.
Making money is the point.
Yep. I got you. Okay.
All right.
All right. So that's cute.
So
we're out of
that one. So
we're out of the position.
We're out of the position. You can see here, it started coming back up right here. We probably got out right around, actually, I can probably tell you.
It tells us right there, right?
The sell was
725.
1725.
Yep. Okay.
All right, 1725, which was right about there.
Okay.
Okay,
Right.
so you see that big green candle on Thursday?
Mhm.
So it came back up. It looked like it was going to come way back up again, come roaring back again.
Mm-hmm.
Well, it came back just about to our sell point where we got out.
Yeah.
And then on Friday it sold off again.
All right. So on this one, do we want to re-engage, or does the chart look messy, or do we?
The chart looks messy.
All
Chart
right.
looks messy.
And we
I'll
don't
say.
like the messy chart, so we're not playing with this one this week.
Yeah, I don't think so.
That's fine. That's an okay.
Although I will say something that's interesting on the NASDAQ. I actually have quite a few of the charts here. You can see here, it roared back, it sold off, it bounced off the 200 again.
Yeah, it did.
See that on Friday?
I did. Yes.
I started coming back.
Yeah.
And the volume wasn't more than average, but it
wasn't weak
even
either.
or it was even or roughly a little bit higher than this big sell-off.
Okay.
But the other thing that's even more interesting is the I don't have it on this chart, but the accumulation distribution, which I'll show on another chart.
Okay.
Yeah, there's another one I have.
That's all right.
It's even though it's sold off, it actually looked like it was being accumulated. So the big players were taking advantage of the sell-off to actually add positions.
All right. So again, stock's messy, not trading.
No problem. Messy, right? So now let's look at RF.
So again, this one is a financial or macro, because again, what's important, what I want to get here is this is not all technical trading. For me, it starts at the macro, right? That's what I've looked at my entire life. But now you're taking that and you're finding charts that match or look particularly interesting. For us, again, the second macro view was the yield curve is not inverting. In fact, it is steepening. And when that happens, banks make bank. You found a regional financial, actually, that's the name. You found a bank that looked good. And that was our second bet.
Right.
Okay. Same deal.
Right.
Two tranches. Unlike the first one, only one of them executed, it looks like.
Only one of them executed. And interestingly, it's the one that you mentioned last week. You said, what if it doesn't go down and it goes up instead? Because remember we put the buy point underneath where the price was.
Right. Exactly.
We were hoping it would go down a little bit. We buy it, then it would go up.
Right. Okay.
But instead it went up.
Is the other one still active? It should be, right? Or
no, I removed it.
Oh, okay. All right. Fair enough.
We can put it back on, but I wanted to see what this was going to do.
Got it. Okay.
So in this case, and this is something I typically don't do, is put the buy point higher up right away on the trade.
Yeah,
I'll put the stop on right away.
Of course.
Because I want to protect the downside.
Yes.
But I also want to see what it's going to do before I start putting my upside.
Got it.
Additional purchase on. But in this case, we had it on already.
Yep.
So it went up and it took out our higher price
at
25.42.
Okay.
So that was right here.
Yep.
And you can see it just barely took it out, and then went back down the rest of the day.
Okay.
And then the next day it went down. The next day it started going back a little. Next day it came back. It never hit our stop price.
Yep.
So we're still in half of the trade.
Yep.
And on Friday, see what it did on Friday? Came roaring back. Now a lot of the big banks reported Friday.
Well, yeah. Wells Fargo, Citigroup.
Wells Fargo in particular had really good earnings.
Yes. Yes.
All right. So that was a good one. So we're in this one. We're basically at break even.
Okay. Now, do we do something different now? Again, same kind of question as the first one. Does this chart actually look better than it did last week because of the reversal?
It looks better. Yeah, it does look a little bit better.
Okay.
As of Friday. I will say that some of these indicators are a little bit overbought.
Oh, okay.
So I'm not sure how much more of a run it's going to have. And this one, I just like to watch it, see what it does.
Fair enough. So we're not doing anything with this one. The other one we're out of, we're not rebuying. So that's the summary of the week. Again, folks, I'm learning here. I'm definitely a real estate guy. I'm trying to learn a new skill. I'm trying to remove emotion, which was always my downfall in stocks. I love the macro thesis. I love trying to hunt for things that may be opportunistic with charts, but for me, it still starts at the macro. Any kind of closing thoughts in summary of last week?
Nope, that's pretty accurate. We can look at some other ones for next week.
Yep, we will do that in episode 2. I've actually sent you 2 names that we will look at in episode 2. Thank you very much.
Sounds good.